When you're considering how to structure a new company in Denmark, one of the most attractive options is the Anpartsselskab, or ApS, and understanding why can give you a real strategic advantage as you plan your business. In this video, we'll walk through the key benefits of choosing an ApS structure, how it compares to alternatives like an enkeltmannsvirksomhed or an IVS in the past, and what this means in practical terms for ownership, risk, and growth. Let's start with the fundamental point. An ApS is a limited liability company, which means that as an owner, your personal assets are generally protected from the company's debts and obligations. In practice, this legal separation between you and your business is one of the most important reasons entrepreneurs and investors prefer the ApS form. If the company faces financial challenges, disputes, or even insolvency, your personal savings, property, and other private assets are typically not at risk beyond the capital you have invested in the company. This is a clear contrast to sole proprietorships and certain partnerships, where the owner can be personally liable, and it immediately places the ApS in a different category in terms of risk management and long-term security. Beyond liability protection, the ApS structure sends a strong signal of credibility and professionalism to customers, suppliers, banks, and potential partners. In the Danish and broader European business environment, counterparties are often more comfortable entering contracts and extending credit to a limited liability company than to a sole trader. When your company is registered as an ApS, it must meet specific regulatory standards, such as having a minimum share capital, filing annual accounts, and maintaining proper governance documentation, all of which contribute to a higher level of transparency and trust. This can make it easier to negotiate payment terms, obtain supplier credit, and build institutional relationships that are essential as your business scales. Another key advantage of the ApS structure is its flexibility in ownership and capital. An ApS can be formed with one or multiple owners, and ownership is represented by shares that can be transferred, sold, or used in incentive schemes, such as employee share programs, subject to the company's articles and Danish law. This share-based structure gives you far more options to attract investors or reward key employees than a sole proprietorship would allow. For example, you can allocate minority stakes to early team members, create vesting structures to retain talent, or bring in external capital without relinquishing full control. The ability to separate ownership and day-to-day management also enables a more professional governance setup, with directors and managers appointed to run the company while shareholders focus on strategic oversight. On the capital side, the current minimum share capital for an ApS is relatively accessible for many entrepreneurs, and it does not have to be fully paid in cash. In some cases, it can include contributions in kind, such as equipment or intellectual property, if properly valued and documented. Although this is a greater commitment than starting as a sole proprietor, it creates a stronger capital base, which again contributes to credibility with financial institutions and investors. From a tax perspective, an ApS is treated as a separate legal entity, which opens opportunities for tax planning that are not available if you operate as an individual. The company pays corporate tax on its profits, and you, as an owner, are taxed separately on any salary and dividends you receive. This separation allows you to optimize between salary and dividends within the boundaries of Danish tax law, and to reinvest profits in the company at the corporate tax rate instead of immediately having all profits taxed as personal income. Over time, this can support more efficient capital accumulation and reinvestment in growth. Furthermore, if you plan to establish a holding structure, for example, by owning your operating ApS through a holding company, Danish rules can be highly favorable for tax-efficient profit distribution and future exit scenarios, provided the structure is set up correctly from the outset. Governance and compliance obligations in an ApS are more structured than in simpler forms, and while that might sound like a disadvantage, it actually brings discipline and clarity that support sustainable scaling. You are required to keep proper accounting records, prepare and file annual financial statements, and follow specific rules on decision-making, such as shareholder resolutions and board or management responsibilities. For a serious business with ambitions to grow, these frameworks create transparency for owners and stakeholders and reduce the risk of informal arrangements leading to conflicts. When you onboard new investors or partners, having a clear legal and governance setup through an ApS makes negotiations smoother and due diligence far more straightforward. Another benefit that is often underestimated is the ease of continuity and transfer. Because an ApS is a distinct legal entity, changes in ownership do not necessarily disrupt the business itself. Shares can be transferred according to agreed terms, enabling succession planning, partial exits, or full sales without having to shut down and restart the underlying operations. This is highly relevant if you are building your company with a potential exit in mind, whether to strategic buyers, private equity, or management. The ApS is also a well-understood and widely used structure among both Danish and international investors, which reduces friction when you eventually engage with external capital. For foreign founders looking to establish a presence in Denmark, the ApS is often the default corporate form, precisely because of this familiarity, the clear legal framework, and the straightforward process for registration through the Danish Business Authority. It signals commitment to the Danish market and demonstrates alignment with local regulatory expectations, which can be particularly important when hiring talent or entering into contracts with Danish public or semi-public entities. Finally, while there are recurring costs associated with running an ApS, such as accounting, potential audit requirements above certain thresholds, and administrative filings, these costs should be seen as investments in durability and professionalism, rather than as pure overhead. The structure you choose at the beginning will shape your ability to attract capital, manage risk, and execute your strategy over the long term. And in many cases, the ApS offers the right balance between flexibility, protection, and credibility. In summary, choosing an ApS structure in Denmark provides limited liability protection, enhances your professional image, enables flexible ownership and investment, offers meaningful tax planning opportunities, and supports structured governance and long-term continuity. If you are serious about building a scalable, investable business in Denmark, the ApS is often the most effective foundation. As you move forward, it is advisable to consult with legal and tax professionals familiar with Danish corporate law to tailor the setup, capital, ownership, and governance to your specific strategy and to ensure that the benefits of the ApS structure are fully realized for your company's future growth.